What we can see is that companies are spending and they plan to spend even more. We did a survey last month of 100 corporations, and 87% of them said they will increase spending on Gen AI over the next year, and a grand total of 0 out of the 100 said they would spend less.
Welcome to GeekWire. I'm GeekWire co-founder Todd Bishop. This week, our guest is Colin Sebastian, a longtime technology analyst who covers some of the most influential companies shaping the digital economy. As a managing director and senior research analyst at Baird, Colin focuses on internet platforms, digital media, e-commerce, and interactive entertainment, and covers companies including Amazon, Google parent, Alphabet, Facebook parent, Meta, gaming giant Electronic Arts, and others. He brings more than 3 decades of experience across investment banking, software development, and equity research, and he's widely recognized and award-winning for his thoughtful, accurate, and forward-looking analysis. Colin, it's great to have you on.
Thanks, Todd. Really a pleasure to be here. Thanks for having me.
We've got a lot to talk about. Perhaps not surprisingly, a lot of it includes AI. Not all of it, but a lot of it. And items on my list include Amazon's AI push, Google search and AI chatbots, Meta's AI talent hunt, the impact of AI-related capital expenditures, video games. And I really want to find out before we end how AI is impacting your job as an analyst too, Colin. So that's just a quick preview for folks. But you started your career right around the dot-com boom in the years leading up to that. And now you're covering what some would see as a comparable inflection point. Just as a frame of reference, I'd be really curious to get your comparison of the two eras, the dot-com era and the generative AI era, in terms of investor psychology and company behavior and long-term value creation. Like, how do you compare and contrast these two moments in time?
It's a really interesting question. And I do think that we all have learned a lot about how to invest both in the private markets as well as the public markets in terms of new and transformative technologies. But obviously there's a lot of hype, a lot of excitement around generative AI. If I step back for a moment, I remember, we wrote a white paper on machine learning and what I called intelligent data, kind of looking at the horizon of what was emerging. This was 10 years ago. And, one of the things that you'd hear walking the halls around Silicon Valley, and everyone was talking about it. But if you stepped out into Wall Street or Hollywood or Madison Avenue, people just sort of looked disinterested.
Yeah.
And, this was a report about everything that was emerging just, at the beginning of machine learning, and was sort of our investment framework for companies like Google and Amazon and Facebook at the time. Literally, one of our internal salespeople, said, "This report's a joke. We can't market this to clients. Investors don't care." And it's funny, if you had gone back to, the mid 90s, right, with Netscape and then the emergence of .com, everybody cared. And I think there was just a level of skepticism. And I think with Gen AI, and certainly post the launch of ChatGPT, it does feel a little bit more like that era. But quite frankly, you don't have the private market spitting out a whole lot of IPOs. That is what would engage investors. I think a lot of us view some of the traditional internet companies and obviously chip companies as being the AI winners near term. And I think that restrains, from an investment perspective at least, some of that enthusiasm or some of that hype. So we don't see valuations that are just off the charts like we did, back in 2000. And I think, to that extent, we will see the development of the technology and companies that follow, where investors do need to stick their necks out and jump on that bandwagon. But, we don't have that situation where there are a lot of unprofitable companies. So I think it's a healthier situation this time around.
From the perspective of Amazon, I pay a lot of attention, as do you, to the cloud business and the infrastructure business. And to the extent that they've been doing AI, things like, Amazon Q and Nova have been interesting. But I'm curious, do you think Amazon needs a breakout hit in consumer AI? Something like the next generation Alexa Plus taking off to stay competitive in this next generation of the platform wars? Or can the company continue to succeed in AI by focusing on infrastructure and tooling as it has with AWS primarily?
Well, I do think Amazon views devices and conversational interfaces as very important strategically. But from my perspective, even if Alexa or the Amazon devices lose even more luster perhaps than they have already, the fact of the matter is if OpenAI and other models, if they want to be involved in e-commerce, and they really have to tap into Amazon's marketplace. And from that perspective, I mean, that's not even talking about AWS and how they're already integrating with a lot of the models, both closed as well as the open source models. But I think Amazon will have a very big piece of whatever it is that these models are doing when it comes to e-commerce, and that ensures Amazon's position within those ecosystems. But that being said, Amazon does kind of talk a big game with Alexa, and they lost, as I said, a lot of luster, and there's a huge functionality gap that they have with the LLMs. And OpenAI is building devices, right? And soon Google with Gemini, where they have an advantage, will get integrated more in Android devices. So I think they will be fast tracking Alexa development. Sadly, I'm not included in the beta, so I can't give you a whole lot of insight as to how well it's doing. But I'm optimistic for Amazon. They said they're building 1,000 Gen AI apps. If they can integrate those with Alexa assistants and agents, then they certainly have a real shot at being a player there.
I am using the early access of Alexa Plus. I've been using it for the past few weeks, and
Oh, tell me.
it's so much better just in a conversational way, and the fact that you can access a lot more through this generative AI solution that they've come up with. But I'm really looking for kind of the killer app of the whole thing, and I think a lot of what they've bet on is the notion of agents and booking a reservation through your Alexa automatically with an agent, and I'm just having a hard time getting there. And the problem too with Amazon not being fully integrated with, a corporate email system or a calendaring system, and everything kind of being a more loosely coupled connection that you kind of have to be purposeful about giving it your information on a specific basis. I could go on and on. That's more of an Alexa Plus review, but I'm not convinced yet. That's the bottom line. I'm not convinced yet that they have their next big hit in terms of Alexa Plus. I think the jury is very much still out on that. I don't know what you've been hearing from folks as well.
Well, I think that's right. The jury is definitely still out. On the other hand, there are a lot of capabilities emerging, such as MCP servers that will allow various platforms to connect with Amazon's ecosystem, irrespective of whether Alexa Plus or the next Alexa Plus Plus is a killer app. So the good news for Amazon is that other companies will take care of some of that agentic integration.
On that topic, so we do have earnings season coming up here, and this is going to be going out just before all the earnings hit. Are there specific things that you're looking for, to the extent you can say, in the major tech companies you cover, and sort of some common themes that you expect to come up from Meta and Alphabet and Amazon over the next couple weeks as they report their earnings?
Well, yeah, certainly the health of a business, each of those businesses within the context of the macro environment is important. I think there's a lot of short-term perspective on, what may be happening on the consumer spending side, what might happen in terms of tariffs and other macroeconomic geopolitical influences. So that's certainly very top of mind. I think below that sort of macro level, one of the common denominators, not surprisingly, will be in cloud computing, the respective cloud service platforms, and what sort of growth rates are they seeing both in their core workloads as well as what's incremental from AI. That's a very important topic, given all of the spend on infrastructure, and certainly any indications as to the return on investment of those capital expenditures is important as well.
How are you thinking about that ROI, and what do you hear from your clients? Because this is this is tens and tens of billions of dollars, and of course they've been spending that on capital expenditures over the years to build out their data centers and their cloud platforms. But it feels like it's just been supercharged over the past year or so. I mean, what kind of time horizon are you looking at for payoff for this? As someone who follows this.
Yeah, I think that there's generally understanding that these are long-term investments, right? And what you want are some breadcrumbs that give you an indication that even if these investments need 5 or 10 years to ultimately generate a positive return, that they're on the right track. And I think that explains some of the questions we ask on earnings calls or outside of earnings calls around the level of adoption of Gen AI tools and services and the momentum or velocity of spending on those tools and services. I mean, the reality is right now, you can't look at the revenues for this year or next year. They're just not, there's not enough yet to justify the spend. It's what happens over the next 5 or 10 years. And that's how return on invested capital is evaluated. What we can see is that companies are spending, and they're spending more, and they plan to spend even more. We did a survey last month of 100 corporations, and 87% of them said they will increase spending on Gen AI over the next year, and a grand total of 0 out of the 100 said they would spend less. So those are the sort of indications that you're looking for. And a lot of focus, obviously, on things like coding, assistance, and advertising and disruption there. But in the context of every industry having applications of generative AI, it does feel like we're at the early stages, and that does give us confidence that those $300+ billion of capital expenditures will ultimately generate some positive return.
Well, I can imagine that one of the most interesting parts of your job is setting stock price targets. And you actually made some news, some headlines on this front just last week related to Meta. So I want to talk about that when we come back. We're going to take a quick break and we will be right back. Welcome back. It's Todd Bishop. My guest this week is Colin Sebastian. He is a longtime tech analyst who covers companies including Amazon and Alphabet and Meta. And Colin, just last week, you made a call on Meta that made headlines, at least in the places like Investors Business Daily and that sort of thing. You raised your stock price target for them from $635 a share to $740. And it struck me as maybe a good little case study. Like, what went into that? What were you seeing that made you go, this is the moment, and I'm going to raise this target for Meta?
I think in that case specifically, there were a few catalysts. Number one, as we do every quarter, you talk to industry people within advertising, for example. You talk to Meta's customers and get a sense for how business has performed in the quarter. And those checks were fairly positive. And I think that bodes well for advertising growth, especially in an environment where everyone is still a bit on pins and needles on the macro side. Secondarily, the messaging business. So that we had put some work into what could Meta generate in terms of incremental revenues from WhatsApp, Messenger, and the broader messaging platform there, and determined that this could be a $40 to $50 billion revenue business in roughly 5 years. And so that gave us a little bit more confidence in the valuation for Meta. I think also understanding that there's been a lot of concern over Meta's AI, the place where Meta sits with respect to AI and generative AI from a competitive standpoint. And my view there may be a little bit more constructive than what you read in some of the media. I think even despite hitting some speed bumps, they're very well positioned, and that was part of our call as well.
There were the recent headlines about Mark Zuckerberg going out and being very aggressive in terms of his recruiting of top AI scientists and engineers, creating this super intelligence team. Did that give you more confidence in their AI initiatives, or is that a little too abstract and far out in the future to incorporate into something like evaluation that you would give now?
It's not specifically part of evaluation, but it does mean they're being aggressive and they're taking it extremely seriously. And I do think there's a lot at stake across the whole platform. And that's a continuation really of what their strategy has been in terms of showing relevant content to users and automating the advertising flows within the business. And so layering on top of that, Meta AI, which is very important both to the core platform and later on to devices and physical AI. I don't think Mark Zuckerberg has a lot of patience for any delays or stumbles. He's not going to sit idly by. And even if Llama 4 isn't as good as they want it to be, they arguably still have one of the top, if not the top, open source model I think that investors should keep that in mind as they think about the role that some of these applications and businesses could contribute to Meta over the long term.
I always look at companies like Meta and to some extent Amazon and Alphabet and Microsoft and think, okay, how much of this is going to be like almost a new feature on top of what they're doing versus a completely new inflection point, an entirely new area. And I think that to me is one of the open questions here still, whether these existing platforms are going to remain relevant by leveraging what they're doing already, or if they're going to be able to make the leap into something entirely new. What are your thoughts on that?
Well, I think they're all working towards AGI and ASI, which are forms of advanced intelligence, obviously. But within that context, which of these platforms will be the most common or preferred digital assistant? There are a number of arms races occurring simultaneously. One of them is very important for Meta, which is in 5 years, 10 years, what platform do people use to accompany them throughout the day to answer questions, to complete tasks for them? Is it Google? Is it OpenAI? Is it Amazon? Or is it Apple? Or is it Meta or somebody else? And you get back to why Meta feels like they have to have some of the best brains in data science and artificial intelligence. It's very important that Meta AI is one of the leading digital assistants. And I think that explains a lot of what they're doing right now.
I really like that way of thinking about it because so much of what I think about currently is just like, okay, who's there when I open my browser? But really, it feels like who's there in my ear when I'm walking around, or who's there on my phone at my quick command by saying, hey, Google or Alexa or whatever. And actually just going back quickly to the Alexa Plus thing, that has been the one thing, I really have tried. I set Alexa Plus as the default trigger on my Android, and I've really tried to get into using Alexa. And it's hard without the direct integration into the OS that you would get from iOS or Android with Apple or Google. And I think that is one challenge that Amazon is going to face in this realm. Just to go back to what we were talking about earlier, that it's kind of disconnected in some really strategic ways from the existing infrastructure that we all use.
Well, and I think beyond that, I think for Meta as well, Mark Zuckerberg, as you know, I think does not have the best relationship with Apple. And I believe he has made it a significant priority internally not to be dependent on the mobile operating systems for that next transformational leap in technology. And so Meta wants to be essentially an operating system for generative AI, for those digital assistants on its own, and eliminate that dependency on the existing operating system. So that's an issue that Amazon, Meta, and certainly a lot of other companies face.
Yeah, to some extent, Microsoft, although they're in their own unique place and they've got their own advantages to a certain extent, given the Office platform and Windows and everything. But yeah, it's interesting. It feels like Google and Apple are in some ways in very strong positions because of their connection to the mobile OS and the hardware. And it's almost like, in some ways, you could say it's their race to lose. Maybe that's going too far. I don't know what you think.
Well, to an extent it is, right? If you look at the incumbents, whether it's the operating system, obviously you can look at devices, you can look at browsers. That's certainly an important area as a gatekeeper, if you will, to the internet, and certainly in specific applications like search, right? So in each of those, if you're the incumbent or legacy provider, and AI changes the paradigm, so to speak, for each of those elements, then you have to defend your turf. And Google's doing a pretty good job at defending its turf after a rough start. Maybe others are not doing quite as well.
You alluded back there to the macro environment. I am really curious to the extent that you can share what you're seeing. I mean, it's kind of hard to put a finger on it at any one given moment these days. I mean, given the political environment, legislative environment, taxes, spending, everything happening with the big, beautiful bill, as it's called. Maybe the best way to ask this is, what are the key things you're watching right now? Like when you pick up the Wall Street Journal or, the New York Times or whatever your newspaper of choice or website of choice might be, like, what are the issues that you're watching most closely on the macro level?
Yeah, it's a great question. I think we spend a lot of time talking about emerging technologies and some of the enterprise facing elements to this, but really these are still consumer businesses. And so in that context, we really have to look closely at the health of the consumer spending, and more specifically in e-commerce. And so there you look at prices as an output of what happens with tariffs. Obviously, we look at the same health indicators for consumers around spending and wages. Those are all important inputs, especially as you get closer to the second half of the year, the back to school period, we look at very closely, and then the run up to the holiday. I think one of the things that we've been keeping an eye on, that's also important, but doesn't get as much press, is on the services side. It gets a little bit of press with the EU or Canada trying to tax digital services, but the US maintains a significant trade surplus in services, and a lot of that falls on companies I cover, like Google and Meta and Amazon and others. And so it's certainly a potential target in some of these discussions around tariffs. And so I do wake up in the morning and wonder when we're going to see some sort of levy placed on services where those other countries are actually at a deficit to the US, a trade deficit, cloud computing, financial services, search, et cetera. So we have to be cognizant of those risks beyond just sort of looking at specific tariffs or consumer spending.
So those would be kind of in the realm of proactive reciprocal in some ways, where another country might say, wait a second, look at everything we're, quote, importing on the services level. Let's get back at the US by effectively taxing that.
Yes, that's right. So essentially, the White House is framing everything in the context of goods as being trade, but trade for the US actually involves a lot of services, and we have a massive trade surplus when it comes to services. So it's a point that I worry about with respect to my companies, that, as you say, it could be a target for some reciprocal tariffs from other countries.
Well, you also pay attention to video games, and I'm sure AI may be coming up a little bit in your own process as an analyst. So I want to talk about both of those topics when we come back. Two different topics. You're listening to GeekWire, and we will be right back. Welcome back. It's Todd Bishop. I'm talking this week with Colin Sebastian. He's a longtime technology analyst who's managing director and senior research analyst at Baird. Colin, it's cool for me to be able to chat with you because I do hear your name and I get to listen to your questions on mostly the Amazon earnings calls in terms of what I end up paying attention to as a reporter. I'm curious, how do you pick the question that you ask on the call? Are you looking for broader insight to inform your model as an analyst? Are you looking to glean some sort of piece of information that you wouldn't be able to otherwise get? I'd like to talk a little bit about your process as an analyst, because I think it might be informative for folks out there.
Well, Todd, that's part of the secret sauce, but
proprietary.
Right. No, but seriously, I think it really depends on what's happening at the time. I mean, part of it is what investors are most interested in. And in that way, you're representing essentially a broader group of shareholders and what they would ask, as opposed to what a specific analyst might personally be interested in. So that's part of it. But it's also understanding what a CEO or a management team is able to respond to, or how they respond. And so the way you frame a question is important in terms of trying to get enough of an answer where you actually learn something that's interesting. So I think those are the primary variables that we think about.
I'm always amazed by how quickly the analysts, yourself and others, are able to have deep insights on the numbers, given how quickly the earnings calls happen. So can you talk me a little bit through your process? I mean, are you using spreadsheets? Are you using AI? Is generative AI coming into play for you at all? I'd just be curious about sort of especially your earnings day process for quickly getting up to speed on whatever was just announced.
Yeah, I think in that specific case, in the earnings announcement, for example, there's a lot of preparation that goes into that. So as an analyst covering approximately 20 companies, you know a lot about the company, you know what to expect, you know what the numbers mean. And so when those numbers are released, it doesn't take that long to be able to contextualize what a company has just reported. For those who are more arm's length or not paying as close attention, they wouldn't necessarily have that perspective right away. Certainly spreadsheets are very important because that's how we model these businesses and we keep track of their numbers. I'd say we're still really early in terms of understanding how AI can kind of reshape that process. As you put it, I think that there's a lot of potential to drive more productivity in putting numbers in models, perhaps summarizing documents. But part of what I think allows us to continue to add value is it's really the perspective of covering these industries and these companies for many years. And I don't think we're quite yet at the point where AI is adding a lot of value from that perspective. So, but I do hope for some productivity improvements in the next couple of years.
I have to tell you, I was blown away. I took, just as a sort of case study, this was not on an earnings day, but I took the PDF of Amazon's earnings. This is a couple months back after they came out, a week or so after they came out. And I put them into Claude. I found that Claude, for some reason, is better at visualizing. Like it just the graphics look better, but it's also better at taking the data and translating it into visuals. I put that in there and I put literally the PDF and I said, give me a dashboard of Amazon's key numbers for the quarter. It freaking blew me away. And I went back and I checked all the numbers. Not that I would just put that out there without, giving my own analysis and all that sort of thing, but just as a quick window, I was surprised. And so
well, that's exactly the type of value I think it can provide. And that provides a lot of relief in terms of the workflow. And we hear a lot about allowing people to spend time on the more valuable aspects of our jobs, right? So I think before it replaces an analyst or other observers, I think hopefully it allows us to spend more time doing the analysis and the observations.
Yeah, for me, the amount of time I've spent in Excel or Google Sheets trying to figure out how to make that little one data point, a different color so it can be viewed. I mean, it's that kind of stuff. That is not the highest and best use of my time nor of an analyst's time or anybody. So yeah.
Well, it's an interesting point, Todd, especially when you take that example and extend that across all of software. There's a big question as to what's going to happen to all these legacy software tools that we're all struggling to use.
Absolutely. And just the ability to create little tools here and there that, just one-off things for your team to solve a purpose. Like my mind has been totally shifted on this stuff just from a little bit of hands-on. So yeah, I'm fascinated by it. So on this point, it's really interesting to see the job market and what's happening right now with, on the one hand, companies like Microsoft making cuts. And, there's an open question as to how much of that's related to AI in Microsoft's case. But overall, Amazon saying, Andy Jassy coming out in his note to employees, which I know you paid attention to, saying, hey, our corporate workforce in particular is going to be less in the future than it is today. And then on the other hand, you've got, Meta out there, recruiting at, extremely high salaries for the people on the other end of the spectrum. And then at the same time, you've got these companies that are spending tens of billions on CapEx. How are you looking at the investment landscape when you look at jobs and capital expenditures and the contrast between those two right now?
Well, it's an incredibly important topic, and I think we have at least the benefit of history when we think about that. In other words, we've seen major transformations in technology or economies in the last couple of centuries happen multiple times. And the optimistic view is that each of those has ultimately generated a lot more economic activity and thus a lot more employment after perhaps a rough transition period. And I think what we're really worried about, or what society is concerned about, is that transition period and what happens to people as AI or Gen AI is a substitute for roles, and companies won't be able to resist the temptation, I don't think, certainly public companies, to be able to benefit from those productivity gains. So it's going to become an increasingly important issue. And to your point around CapEx and the ability to generate positive ROI, I have little doubt that part of the calculus there is that revenue per employee can go up meaningfully as companies grow without needing to add much in the way of headcount or even decreasing headcount. And you mentioned Microsoft and video games, and that's certainly an area, along with junior level coders or the advertising marketing industry, where we're already seeing that happen. So it's not even theoretical. It's certainly happening, in front of our eyes.
Do equity analysts such as yourself track that revenue per employee number when you're thinking about valuations?
To some extent, we do. I mean, on the other hand, it's especially covering companies where engineering is one of the most important aspects of building value within companies. You don't want to get too bogged down in that. Like you mentioned with respect to Meta, they need to hire a lot of expensive engineers to get to the point where they have the right AI and generative AI internally. So we do think about it, is the short answer. We don't want to get too burdened by that metric specifically, though.
Yeah, if you over-index on that, suddenly you don't have any products to generate revenue. So yeah,
Yeah.
I could see where that would be a tough balance. One thing that I meant to ask about earlier, and just to circle back quickly, is this whole issue of Google search and the idea of the generative AI search, which they've been increasingly shifting toward. I'm curious how you see that shaking out for Google, how the AI overviews are going to impact publishers and advertisers. Can you just give me your 10,000-foot view of that issue as an analyst who covers Alphabet?
Yeah, it's a very important question for Alphabet. I mean, Google core search is losing share. They're likely even declining in the number of queries in markets like the US, but they're not standing still, right? They have AI overviews, they have AI mode, they have Gemini. And I think from that perspective, Google as a platform is still growing in terms of overall search. And that's an important development as you evaluate Google as an investment. And I think, honestly, if I told some of our institutional clients a year ago that Google search revenues would be growing double digits ahead of the industry growth rates, they probably would have laughed me out of the room. I think maybe they did actually a couple of times. But the reality is that Google has tremendous capabilities in AI, and we're starting to see the benefits of that. But that being said, the pressure is still on, right? We did a survey of Gen Z consumers recently, and the number one tool they use to shop a year ago, by the way, was TikTok. And this year it was ChatGPT. And
Really?
3 years ago was Amazon, and 5 years ago was Google. So first of all, it changes very quickly. But another search interface is now, among Gen Z specifically, the most popular shopping surface. So the very interesting thing that comes out of that to me is the amount of trust that people have for the output, for the information they get from whether it's ChatGPT or Gemini or the others. When we know there's a lot of hallucination and a lot of factual errors that happen, right? But what's interesting from a user or even cultural perspective is people really trust the answers, and that makes it very compelling from a search perspective. And that's why it's so important that Google is moving a lot faster than they were a year or two ago.
Interesting. In the shopping realm, it's kind of different because in some ways it's high stakes and in some ways it's not. You can always do a return. And I guess the alternative in terms of voice of authority might be a user review, which in some cases you can trust and in some cases you can't. So it's fascinating to hear that the AI is becoming that influential and that it's so transient. It's just really interesting. It seems like maybe then that creates an opportunity for somebody even completely new that might not be one of the existing platform providers to come in and take it over.
Yeah, that's right. Or hey, maybe Alexa. Maybe there is a killer app in there somewhere.
Before we end here, I got to ask about gaming. In fact, you and I used to connect back in the day, back in the heyday of the Xbox. We might have talked last. Maybe could it have been the Xbox 360 launch? Is that possible, Colin?
And that does seem like the heyday, doesn't it?
It really does. Well, it seems like so much has shifted to handhelds and cloud gaming, and just the whole market has changed. The consoles don't seem to have quite the hold on the center of the gaming universe, as important as they are still. But you've got things like the new next-gen Nintendo Switch, the new Xbox handheld that was announced. And obviously you track this in part through Electronic Arts, which is a competitor with Activision Blizzard in some ways, which Microsoft owns. Well, that's a lot that I just threw out there. But what are the key trends that you're watching right now in video games in particular?
Yeah, I mean, over the years, we've seen certainly a consolidation of market share on the software side, and then a dispersion in terms of how gamers are accessing content. And then just to complicate things even further, a business model change. People don't go into stores and buy games, right? They either download them or increasingly they are live services. They're games as a service where you play Fortnite and you monetize through digital goods and other transactions. And that's very disruptive for the industry, particularly the legacy players, to capture, and certainly for the hardware platforms as well. And there's another dynamic, and that's the competition for people's time. And I really think that TikTok has been a significant influence here. People are getting their entertainment from TikTok. People are traveling more post pandemic, right? They're doom scrolling in social media. And so it's not enough to have another sequel to another game, right? It has to be really compelling because people have a lot of options for their leisure time. And so, the very best games are actually doing quite well, and everything else, which is certainly the majority of number of games, have really struggled. And then I think the video game industry has, especially the public companies, have struggled to adapt to that. In the same way, the overall spending on interactive entertainment is still pretty resilient. It's just not growing as quickly as I think we had hoped maybe 3 to 5 years ago.
That's really interesting. It's all about that attention and time. And in that way, all these things are competing with each other, like everything we've talked about here today. I'm curious, just to tie the two together. Are you seeing AI impact the way games are rolled out, the actual gaming experience? And I have to say, I've played games over the years. I've gone in and out, and I'm like, I'll spend my weekends vibe coding now as opposed to playing Halo. So, and that
There you
actually
go.
dates me that I would use a Halo reference. But anyway, just to give you a sense, so I'm representative of this trend. So I actually don't know this. Is AI playing out in the experience of playing games yet?
Todd, do you have another hour, or we, we have to do this in 2 minutes? It's having a significant impact. I mean, part of it is, if we go way back, the emergence of open world games, and then
Right.
you know non-playing characters that are essentially run by AI, and that's been around for
Of
a
course.
while, but
Right.
they're much more dynamic now, and that's what happens within the game, right? And the role of the story can evolve, the characters can change. Ultimately, who you're playing is a much more dynamic opponent and less predictable. So that opens up the door to a lot of new experiences. And if you're a bull or an optimist on video gaming, imagine the different interactive experiences that we'll have down the road. There's another side of it, of course, which is in game development, which is already being disrupted to some extent by AI. So I'd say the entire industry is facing a massive AI transformation. We're on the early stage of that.
Where is EA positioned in all that? Are they in a place to capitalize on that, or is it more of a threat to them?
Well, I think for both EA and Take Two and other large and successful publishers, there is an opportunity. There's an opportunity because they have some of the most popular game franchises, and that's where a lot of the value is. People like playing Grand Theft Auto, and they like playing FC football, and so those games can evolve within the context of AI as embedded within games, and with AI perhaps involved in development of games. So it obviously depends more on the execution, but they're both well positioned from the standpoint that they have some of the most popular franchise content within the industry.
As you reflect on everything we've talked about, is there anything you'd want to get across that we haven't touched on yet, Colin, that somebody listening to a business and technology podcast should really have as a takeaway, whether it's from your own research or some of the consumer surveys that you and your team do? Is there anything that really relates to 2025 and these themes that you'd want to get across in closing?
No, I mean, what we emphasize to our clients over and over again is just how important engineering excellence and sophistication is. And that's been probably the best metric or common denominator among the best stocks or the best companies that I follow is that, and that's hard to evaluate, in a given quarter, in a given year, but you can see it culturally. You can see the companies going back to why Meta might spend so much money on certain engineers. And I don't think that changes with AI. I don't think that changes with generative AI. I think ultimately that is a great way to evaluate companies and businesses and the likelihood that they'll be successful in the future.
That's interesting because in some ways it's more qualitative, as you're saying. You can't really quantify it in the short run. It's a little bit more of a gut feel, something that maybe a human and perhaps not an AI might be able to evaluate.
And that's why you still need equity research analysts, Todd.
Exactly. I was setting you up right there.
Thank you. Perfect.
Well, Colin, Sebastian from Baird, this has been a lot of fun. It's been great to get a sense for the landscape as you see it. And I'm looking forward to following your earnings coverage over the next few weeks and beyond. So thanks for joining us.
Yeah, thanks, Todd. A lot of fun for me too. I appreciate it.
Curt Milton edited this episode. Thanks for listening, everybody. I'm GeekWire co-founder Todd Bishop, and we will be back next week with a new episode of the GeekWire podcast.